Net worth of a business. Businesses are involved in selling goods and services in order to make profit. After trading for some time, the owner of a business determines the basic monetary value of the business resources. This helps the owner to assess whether the business is expanding or not. Introduction. At a point in time, the proprietor would wish to measure the value of the business in terms of borrowed property, property owned, and capital invested. This shows the financial position of a business at a given time. Meaning of terms. There are various terms used in net worth of business. They include asset. Asset are properties owned by the business such as building, furniture, motor vehicles, equipment, machines, stock, debtors, cash in hand, and cash at bank. Classification of assets. There are two types of assets, fixed assets and current assets. The following fixed assets. These are the resources that are expected to be used in the business over a long period of time, usually more than 1 year. They are used to assist the business in its day-to-day operations and not for resale. Examples include buildings, land, furniture, machinery, and motor vans. Current assets. These are the resources that are expected to remain in the business for only a short period of time, usually less than 1 year. They are for resale purposes. They are also known as short-term assets. Examples include stock, debtors, cash at bank, and cash in hand. Liabilities. This refers to the debts that a business owes outsiders, that is, other businesses or individuals. There are two types of liabilities, long-term liabilities and short-term liabilities. The following diagram illustrates the examples of liabilities. Click on the appropriate plate and examples of liabilities will appear. Long-term liabilities. These are the debts whose period of repayment is long, usually exceeding beyond a year. Examples are loans from banks. Short-term liabilities. These are the debts which a business owes other businesses or individuals which are expected to be repaid within a short period, usually a year. They are also called current liabilities. Examples are creditors and bank overdrafts. Capital. This refers to the money or property which is contributed by the owner of the business to either start or keep business running. It is also referred to as owner's equity. Capital represents the owner's interest in the business. Bookkeeping equation. Bookkeeping is the process of recording business transactions in the books of a business. The bookkeeping equation is derived from the fact that all the resources of a business or assets should be equal to the total sum of the funds or money contributed by the owner, that is, the capital, and the creditors, that is, liabilities. Assets is equal to capital plus liabilities. That is, A is equal to C plus L. Balance sheet equation. The equation A is equal to C plus L must always be maintained every time a financial business activity is recorded. It is also known as accounting equation or balance sheet equation. Total resources is equal to contribution plus amount owed to outsiders. Illustration on bookkeeping equation. The following balances were extracted from the books of Juma Traders on 30th June 2009. Determine the value of assets using the balance sheet equation. Creditors 50,000, capital 100,000, 5 years loan from bank 80,000, bank overdraft 20,000. A is equal to C plus L. C plus L is equal to capital plus creditors plus 5 years loan plus bank overdraft. A simple balance sheet. A balance sheet is a statement that shows the financial position of a business at a particular date. It lists the assets, capital, and liabilities of the business. A balance sheet is normally prepared at the end of a trading period using the bookkeeping equation. A is equal to C plus L. Format of balance sheet. The balance sheet is drawn up in the shape of capital letter T. At the top of the T, for instance, above the horizontal line, there is the title which contains the following: the name of the business or business persons, the word balance sheet, the date when the balance sheet is prepared. The left-hand side of the balance sheet is used to list the assets of the business. The right-hand side of the balance sheet is used to list the capital and liabilities of the business. The format of Mwende Traders' balance sheet is given below. From the format of the balance sheet, capital and liabilities are on the same side. Both sides of the balance sheet have equal totals. The two sides are said to be in balance, hence the name balance sheet. The totals of the balance sheet are written on the same horizontal line. The ruling of the totals has a single line above the total and a double line below the total. Relationship between bookkeeping equation and the balance sheet. The bookkeeping equation and the balance sheet are closely related because the latter is prepared based on the former. The total assets will equal the total of capital and liabilities. A is equal to C plus L. Net worth of a business. Net worth refers to the owner's claim on the business. This is the amount the business owner may remain with after paying off all the liabilities. The net worth is thus arrived at by using the formula net worth is equal to A minus L. A, assets, L, liabilities.